Welcome back. The next corporate on our radar is Matrimony. They've reported a good set of numbers, a revenue growth of 7.7% quarter-on-quarter, 6.5% on a year-on-year basis. Margins largely steady at 16.7%, but the bottom line has gone up by 18%. Sushant Pai, the CFO of matrimony.com, is with us on the show. Sushant, afternoon, this is Rima here. In Q4, and this is, I quote the management, with our execution focus and our strategic initiative, we expect to achieve double-digit growth in FY24, along with a significant acceleration in profitability. Q1 revenue growth was about 6.25%. Are you on track to achieve double-digit top-line growth, and what would be the expanded margins for you?
Yeah, thanks for having me here, and good afternoon to all the viewers. I hope I'm audible. Yeah. So, you're right. I think Q1 was an overall good quarter. Like you said, 7.7% growth in revenues, and as well as increasing profitability. Q4 profitability was about 11 crores. And in Q1, we achieved about 14 crores of profitability. So I think overall, we believe that we are in the right step. Many things that we are doing, be it segmentation, be it pricing strategies, be it finding new ways of helping customers. Like, for example, Jodi, that was a segment that we started about 1.5 years back. So we are creating new things. We are helping people find their life partners in an efficient way. So all the things are on track. In terms of double-digit growth, we need to see. That's our goal. If you see matchmaking, this quarter, it was actually an 8% quarter-on-quarter improvement. Marriage services fell down a bit. But hopefully, we'll make it up during the year and see how the year goes in terms of revenue.
Okay. Mr. Pai, I wanted to understand what's happening with average transaction value, because that's been declining in last couple of quarters. In FY23, it was down 6.5%. In Q1, it's down 4.3% on a YOY basis. Can you give us a sense of what's happening and what would the sustainable number be here?
Sure. Actually, that trend itself is not a worrying trend. For us, we don't have a pricing target. Pricing is actually an outcome for us. So what we do is, based on our segmentation strategies, we have a lot of data. We have various communities, then we have markets like North, South, East, West. So it's a dynamic pricing. So we are not too worried about the trend. The trend will be in very similar ranges. But I think what you need to see is whether whatever we are doing, is it working? So, for example, the paid subscription in this quarter, for example, has come to about 280,000 plus paid subscriptions. So that's a good number, which is actually 11% Y-on-Y growth for the quarter on paid subscriptions. So that's the way I would see pricing. Pricing is also an element of various products. For example, we have basic packages, then we have 3 months, 6 months. Then we have personalized packages, which is at a higher rate. We have Jodi, which is at a lower rate. So it's a combination of these things. So, in one quarter, one line of business picks up or falls, the pricing impacts. So we are not too worried about it. We are fine with this sort of a trend. I think we want to concentrate on the paid volumes and increasing revenue and increasing profit. That's the way we see our business.
Okay. So will the paid transacting users go up? Currently, in Q1, it was 2.8 lakh. So do we assume the similar run rate?
See, we need to see, we believe that most of our growth will come through paid volumes. Like in this quarter, right? When our growth was, say, 6% or so, 11% came by volumes and there was a decline in pricing. So that's the way we see, the number. So we believe that most of the growth should come through paid volumes.
Let's then talk about some more segments, especially in matchmaking, because Q1 billing growth is better than Q4 billing growth. What can you guide for here in terms of growth? Will Q2 be better than Q1? Is this a sustainable trend?
Yeah. So what we have said is, Q2 is actually a seasonal quarter for us. So on a quarter-on-quarter basis, there will be a decline. However, on a year-on-year basis, we will show an increment in terms of revenues and billings. However, on a broad basis, in terms of even with this, the Q2 profitability, the PAT, what we have indicated is that it will be better than the levels of Q2 of FY23, same quarter of last year. So that's the way we see Q2.
Okay. So Q2 matchmaking billings will be lower than Q1, but still higher than Q2 of last year. Could you go back to the point that you said your top line growth of 6% was led by what volume growth, and how much of it was taken away due to the decline in pricing?
Yeah, so if you see our top line matchmaking billing growth number was about 6.6. So about 11% was held by paid volumes, and about 6% or so. It is about 4% or so because of decline in pricing. That's what I said. Broadly 11 and 4, so therefore 7% is that's the way to see it.
All right, Mr. Pai, it was a pleasure speaking with you. Thank you so much for joining us and detailing those numbers. That's the word coming in from matrimony.com. Good set of numbers, though the stock is seeing some profit taking as we speak. We'll slip into a short break. On the other hand, on the other side, we'll get you more stock specific information. Stay tuned for that.